Hey everyone, Joe here from Avalon Accounting. If you own a Canadian corporation, you have lots of opportunities to save on taxes if you know where to find them. In today's video, we're going to go over our ultimate guide to tax deductions and credits for Canadian corporations. I'll walk you through some of the most valuable deductions and credits that can save your business serious money when it comes to tax time. Whether you're just starting out or looking to maximize your tax savings, we've got you covered here. All right, let's get started. But before we dive into deductions and credits available to Canadian corporations, there's one crucial foundation we need to cover first, and that's proper record keeping. Without solid record keeping, you can miss out on valuable deductions or worse, find yourself in trouble with the CRA. Even if you qualify for a deduction, you may not be able to claim it without the right documentation. Think of record keeping as the key to unlocking your tax savings. Tracking every business transaction helps ensure that no eligible deduction is overlooked. And in the event of an audit, having your records in order will make everything so much smoother. So, how do you ensure your records are top-notch? Start by setting up a reliable bookkeeping system. Digital accounting tools like Xero and QuickBooks are great ways to track income and expenses. They categorize transactions, making it easier to calculate deductions when tax season rolls around. Every time you spend on something business-related, whether it's a client lunch, a new computer, or paying a contractor, make sure to log it. And a quick bonus tip that will make your bookkeeping life 10 times easier, be sure to have separate business bank accounts and credit cards from your personal. Keep your business transactions separate from your personal ones and you're well on the way to solid bookkeeping. Here's a quick checklist of the types of documents you should keep for tax purposes. Receipts and invoices for business-related purchases. Bank statements to verify transactions. Payroll records for employee salaries and benefits, contracts or agreements related to your business. Having these documents on hand will make tax time much less stressful and ensure you can justify any deductions to the CRA if needed. There are also some tools to make it easier to keep track of your receipts digitally. Gone are the days of storing piles of receipts in a drawer. Apps like Dext and Expensify allow you to scan and upload your receipts right from your phone. These tools can automatically categorize expenses and store everything digitally so you'll be more organized and ready for tax time without the paperwork headache. Once you've got your bookkeeping system in place, you'll be in a great position to take full advantage of the deductions and credits available to Canadian corporations. For more info on record-keeping best practices, check out our receipt tracking video linked in the description below. Now that you've got your bookkeeping system in place, let's talk about the common tax deductions available to Canadian corporations. These deductions can reduce your taxable income, saving you money on taxes. The key is knowing what expenses you can claim. First up, business expenses. If you've spent money to earn business income, there's a good chance it's deductible. Let's run through some of the most common ones. Any supplies or equipment you buy for your business, like computers, printers, desks, even those pens you keep losing, are tax deductible. There's a bit of a difference in how capital assets like computers or furniture are deducted, but they still reduce your tax burden. We've added a link in the description below to explain that difference if you're interested to learn more. And what about the all-important costs related to promoting your business? Now, whether you're running Facebook ads, printing business cards, or even designing a new website, these costs can be deducted. Advertising and marketing are essential for growth, and luckily, they're also great for cutting your tax bill. You can also deduct 50% of eligible meals and entertainment expenses. These include things like taking a client out to lunch or a coffee for a business meeting. It's important to remember that the 50% rule applies though. Only half of the cost is deductible, and make sure you document the business purpose behind the expense. We also have a detailed video on meals and entertainment deductions, so be sure to check that out. It's also linked below. Next up, if you use a vehicle for business, you can deduct a portion of its operating costs like fuel, insurance, and repairs. It's important to keep track of business versus personal use. The more accurate your mileage tracking, the better. And again, we've got a video dedicated to vehicle expenses, so make sure to check that out for all the details. If you're using part of your home as an office, you can claim a portion of your home office expenses like utilities, rent, property taxes, and even maintenance costs. The key is that the space needs to be used primarily for business purposes. To figure out how much you can deduct, calculate the percentage of your home use that's used for business. For example, if your home office takes up 10% of your home's total square footage, you can claim 10% of your eligible home expenses. Some common expenses that can be deducted on a prorated basis for your home office include utilities like electricity, heat, and water, rent if you're leasing your home, a portion of property taxes if you own your home, the interest portion of your mortgage payments, home insurance in some cases, maintenance costs for the office space like repairs or painting. Just be sure to keep detailed records of these expenses and consult with your accountant to make sure you're maximizing deductions while staying within the CRA's guidelines. That's key. Next up, don't forget that bank fees and interest on business loans are fully deductible. These are often small amounts that can add up over time, so it's worth keeping track. If you pay for professional services like your accountant or a lawyer, those fees are deductible. Professional advice is essential for running your business smoothly, and it's great that you get to write off these costs. If you don't yet have an accountant that provides you with the guidance that can help you save taxes, I invite you to check out Avalon Accounting and how we work. Finally, any wages you pay to employees, including payroll taxes like CPP, EI, and any benefits you offer are fully tax deductible. These can even include wages that you pay to yourself as an owner of the corporation. And if you're wondering whether you should pay yourself a salary or dividends, we've got a video on that too, so check it out for more guidance. That's a quick overview of some of the most common deductions, but there's more to come. Now that we've covered some common tax deductions, let's dive into the key tax credits available for Canadian corporations. Tax credits are another great way to reduce your tax bill, and in some cases, they can provide even more savings than deductions. Here are the few that you should know about. The first credit on our list is a big one for companies involved in innovation, the Scientific Research and Experimental Development SR&ED or SR&ED credit. This credit rewards you for conducting research and development R&D in Canada. Whether you're improving a process, creating new products, developing new technologies, you could qualify. Both the federal government and most provincial governments offer SR&ED credits, meaning your company could benefit from substantial tax relief. And tax credits for SR&ED are refundable, so even if your company isn't profitable yet, you might still receive a cash refund. Next up is the small business deduction, which significantly reduces your corporate tax rate. If your corporation is a Canadian-controlled private corporation or CCPC and earns active business income, you may be eligible for this deduction. The small business deduction lowers the tax rate on the first $500,000 of income of your corporation that it earns from active business operations. This can lead to substantial savings for small businesses. Another great incentive to know about is the Canada Carbon Rebate for small businesses. This rebate, just like SR&ED credits, is refundable, meaning you can receive it even if you don't owe any income tax. It's designed to help Canadian-controlled private corporations with fewer than 500 employees offset the cost of carbon pricing. The credit is based on your carbon tax costs and business income, so be sure to keep records of your fuel purchases and carbon tax payments to maximize this rebate. And another helpful incentive for running a green business is the Clean Economy Investment Tax Credits, ITCs. It's used to encourage investment in clean technology. These credits can significantly reduce the cost of investing in clean energy and are also refundable. Here are the main credits available. Clean Technology ITC, a credit of up to 30% for investments in clean energy generation and energy conservation equipment. Carbon Capture, Utilization, and Storage, CCUS ITC, a credit of up to 50% for investments in CCUS technologies. Clean Hydrogen ITC, a credit ranging from 15 to 40% for investments in clean hydrogen production. Clean Technology Manufacturing ITC, a 30% credit for investments in manufacturing clean technologies. Clean Electricity ITC, a 15% credit for investments in clean electricity projects. It's important to note that for each piece of equipment or investment, you can generally only claim one of these tax credits. However, if your project involves multiple types of equipment, you might be able to claim different credits for the various separate components. And lastly, if your business collects GST or HST, you can claim input tax credits or ITCs to recover the tax you paid on business purchases. These credits help reduce your overall tax liability by allowing you to offset the GST, HST you charge clients with the HST and GST that you've paid on expenses. For example, if you paid GST on supplies, services, or equipment for your business, you can recover that amount by claiming it as an ITC. This helps ensure that you're not paying more tax than necessary, and as always, make sure to keep receipts and documentation for all purchases where you pay GST or HST. So there you have it. We've covered the ultimate guide to tax deductions and credits for Canadian corporations. From common deductions like meals and entertainment, office supplies and salaries, to valuable tax credits like the SR&ED credit, the small business deduction, and clean economy investment tax credits. There are plenty of opportunities to save on taxes. Now, if you found this video helpful, don't forget to subscribe for more tips on running a successful business here in Canada. And if you need help navigating the tax landscape or optimizing your accounting processes, check out Avalon Accounting. We are here to help. So thanks for watching, and we'll see you in the next video. Cheers.